There's a silent revolution brewing in the precious metals market, a seismic shift that will redefine wealth in the coming years. And the data, the cold, hard numbers, are screaming a truth that almost no one is prepared to hear. If you're ready to challenge conventional wisdom and uncover a hidden opportunity, please like this video, subscribe to the channel for more groundbreaking insights, and comment "Silver Surge" below if you believe silver is poised for an unprecedented breakout. What I'm about to reveal isn't just a prediction. It's an inevitable consequence of converging economic, industrial, and geopolitical forces that are set to propel silver into a position of dominance, quietly eclipsing gold by 2026, and leaving those who cling to outdated beliefs in its wake. For centuries, gold has been the undisputed king of precious metals, the ultimate store of value, the safe haven in times of crisis, and the bedrock of financial systems. Its allure is undeniable, its history rich with tales of empires built and fortunes made. But the world is changing, and the very characteristics that have long defined gold's supremacy are now being challenged by a metal that is often overlooked, underestimated, and fundamentally misunderstood: silver. While gold has always been primarily a monetary metal, a symbol of wealth, silver possesses a dual nature that makes it uniquely positioned for the future. It is both a monetary metal, with a history as currency stretching back millennia, and, crucially, an industrial metal, indispensable to the technologies that are driving the 21st century. This dual identity is the hidden math, the secret sauce, that will propel silver to unprecedented heights, making 2026 the year it quietly, yet definitively overtakes gold in terms of real-world demand and, ultimately, investment performance. Let's talk about the data, the undeniable facts that underpin this shocking revelation. The global demand for silver is not just growing, it's exploding, driven by the relentless march of technological progress. Consider the green energy revolution. Solar panels, electric vehicles, 5G technology, advanced electronics, all of these require vast and increasing quantities of silver. A single solar panel, for instance, contains approximately 20 grams of silver. As the world rapidly transitions to renewable energy sources, the demand from the solar industry alone is projected to skyrocket. Electric vehicles, another cornerstone of the future economy, use significantly more silver than traditional internal combustion engine cars, primarily in their electrical contacts and battery systems. As governments worldwide mandate the phase-out of gasoline-powered vehicles, the automotive industry's demand for silver will become insatiable. Then there's 5G, the backbone of the interconnected world, requiring silver in its infrastructure and devices. Medical applications, water purification systems, even advanced weaponry. Silver is everywhere, an unsung hero in the technological age. Now, compare this to gold. While gold has some industrial uses, primarily in electronics and dentistry, its demand is overwhelmingly driven by jewelry, investment, and central bank reserves. It is a store of value, a hedge against inflation, but it lacks the critical industrial component that makes silver so unique. This is where the supply-demand dynamics become critical. The annual global supply of silver is finite, constrained by geological availability and the economics of mining. Unlike gold, which is primarily mined as a standalone metal, approximately 70% of silver is produced as a byproduct of mining other metals like copper, lead, and zinc. This means that silver supply is less responsive to its own price signals. Even if silver prices surge, miners won't necessarily increase silver production unless the primary metals they're targeting also become more profitable. This inelasticity of supply, coupled with surging industrial demand, creates a perfect storm for a supply deficit. The data already shows this. For the past few years, the world has been consuming more silver than it produces, drawing down above-ground stockpiles. This deficit is not a temporary blip. It's a structural imbalance that is set to widen dramatically as we approach 2026. The implications of this widening deficit are profound. as industrial demand continues its exponential growth and supply remains constrained. The price of silver will inevitably be forced upwards. But here's the crucial part. Silver is currently trading at a historically low ratio to gold. The gold-to-silver ratio, which measures how many ounces of silver it takes to buy 1 ounce of gold, has historically averaged around 15:1 during periods when both metals were used as currency. In the 20th century, it averaged closer to 40:1. Today, it often hovers around 81 or even higher. This means silver is significantly undervalued relative to gold, based on historical precedent, and more importantly, based on its fundamental utility. This extreme undervaluation, combined with the impending supply crunch driven by industrial demand, presents an asymmetric opportunity that is rarely seen in financial markets. The data isn't just suggesting a price increase, it's pointing to a re-rating, a fundamental repricing of silver relative to gold, driven by its indispensable role in the future economy. But there's another layer to this, a geopolitical and monetary dimension that adds even more urgency to silver's ascent. As global economies grapple with unprecedented levels of debt and persistent inflation, the trust in fiat currencies is eroding. Central banks are printing money at an alarming rate, devaluing currencies and pushing investors towards hard assets. While gold has traditionally benefited from this flight to safety, silver, with its lower price point, offers a more accessible entry for the average investor seeking protection against inflation and currency debasement. In a world where the purchasing power of paper money is constantly being eroded, both gold and silver offer a tangible alternative. However, silver's dual nature gives it an edge. It's not just a hedge against inflation. It's a bet on technological progress, a play on the future of energy, transportation, and communication. This makes it attractive to a broader range of investors, from those seeking monetary safety to those looking for growth in the industrial sector. The year 2026 is not an arbitrary date for this quiet overtaking. It's the point at which several critical trends are projected to reach their inflection points. The build-out of green energy infrastructure will be in full swing, with massive government and private sector investments driving demand for solar and EV components. The global push for 5G deployment will be nearing completion, further increasing demand for silver in electronics. Simultaneously, the effects of years of underinvestment in new silver mining projects will become acutely apparent, leading to a tightening of supply that cannot be easily remedied. The data, compiled by reputable industry bodies like the Silver Institute, already paints a clear picture of this impending deficit. What nobody is telling you is that this isn't a speculative bubble. It's a fundamental reevaluation of an essential commodity, driven by real-world demand that is not going away. The market is slow to recognize these deep structural shifts, but once it does, the repricing will be swift and brutal for those caught on the wrong side. The quiet accumulation by smart money, the increasing chatter in niche financial circles, and the undeniable industrial data all point to one conclusion. Silver is poised to shock the world, not with a sudden irrational spike, but with a sustained, data-driven ascent that will see it quietly, yet definitively, overtake gold in the minds of investors and in the real economy by 2026. The question isn't if, but when, and the when is closer than you think. The quiet erosion of gold's traditional dominance isn't merely a matter of industrial demand. It's a complex interplay of geopolitical shifts, monetary policy failures, and an accelerating technological paradigm that renders gold increasingly archaic while elevating silver to an indispensable status. As we unravel the intricate web of forces propelling silver's ascent, comment "Industrial King" below if you believe silver's utility and technology makes it more valuable than gold in the long run. This isn't a speculative gamble. It's a cold, hard calculation based on the undeniable trajectory of global development, a trajectory that is systematically stripping gold of its perceived invincibility and crowning silver as the true monetary and industrial metal of the future, a truth that will become glaringly obvious by 2026, For centuries, gold's value has been intrinsically linked to its role as a monetary anchor, a hedge against inflation, and a safe haven during times of economic and political turmoil. Its scarcity, durability, and aesthetic appeal made it the perfect medium for storing wealth across generations. However, the modern financial system, characterized by fiat currencies and central bank intervention, has fundamentally altered the landscape. Gold, while still revered, has been largely demonetized, relegated to a psychological safe haven rather than an active participant in daily commerce. Its primary demand now comes from jewelry, central bank reserves, and investment vehicles, which, while significant, are largely static or reactive to market sentiment. This is where the profound divergence with silver begins. Silver, too, has a rich monetary history, but its true power in the 21st century lies in its unparalleled industrial utility, a utility that is not only growing, but becoming absolutely critical to the functioning of modern society. Let's delve deeper into the specific industrial applications that are creating this unprecedented demand for silver, applications that gold simply cannot replicate. The solar energy sector, as mentioned, is a colossal consumer. The efficiency and cost-effectiveness of photovoltaic cells are directly tied to the use of silver. As solar technology advances, the amount of silver per cell might decrease slightly, but the sheer volume of new installations globally is projected to far outstrip any efficiency gains. Governments worldwide are pouring trillions into renewable energy infrastructure, driven by climate change mandates and energy independence goals. This isn't a temporary trend, it's a multi-decade structural shift in global energy production, and silver is at its core. The data from organizations like the International Energy Agency, IEA, and various national energy departments consistently show exponential growth curves for solar deployment, each point on that curve translating directly into millions of ounces of silver demand. Beyond solar, the electric vehicle, EV revolution, is another insatiable consumer. Modern EVs are essentially computers on wheels, packed with sophisticated electronics, sensors, and battery management systems. Silver's superior electrical conductivity makes it indispensable for critical connections, switches, and components that require high reliability and efficiency. As the automotive industry pivots away from fossil fuels, the production of EVs is scaling at an astonishing rate. Every major car manufacturer has aggressive targets for EV production, and these targets are backed by massive capital investments. This means millions of vehicles, each requiring a significant amount of silver, rolling off assembly lines annually. The cumulative demand from this sector alone is set to dwarf historical industrial silver consumption. Then there's the broader electronics sector. From smartphones and laptops to smart home devices and advanced robotics, silver is a ubiquitous component. Its conductivity, thermal properties, and resistance to corrosion make it ideal for printed circuit boards, conductive inks, and various connectors. The relentless pace of technological innovation ensures that this demand will only continue to grow. Furthermore, the expansion of 5G and soon 6G networks, which require vast amounts of new infrastructure and devices, will further fuel silver consumption. Medical applications, where silver's antimicrobial properties are utilized in everything from wound dressings to surgical instruments, also represent a steadily growing demand segment. The list goes on, encompassing everything from water purification to aerospace and defense. The critical distinction here is that these industrial applications are largely consumptive. Once silver is used in a solar panel, an EV, or a smartphone, it is often dispersed in such small quantities or embedded in complex materials that recycling becomes economically unfeasible or technologically challenging. This means that a significant portion of industrially consumed silver is effectively lost to the market, creating a permanent depletion of above-ground supply. Gold, by contrast, is rarely consumed in this manner. The vast majority of historically mined gold is still in existence, easily recycled and brought back into the market. This fundamental difference in consumption patterns is a key driver of silver's impending supply crisis. Now let's turn to the supply side, which presents an even more alarming picture. Global silver mine production has been stagnant or declining for several years. New discoveries of large, high-grade silver deposits are increasingly rare. The cost of mining is rising driven by deeper mines, lower ore grades, and increasing regulatory burdens. Furthermore, because most silver is a byproduct, its supply is not directly responsive to its own price. If copper prices are low, for example, copper mines might scale back production, even if silver prices are high, thereby reducing silver supply. This structural inelasticity means that even a significant surge in silver prices may not immediately translate into a corresponding increase in mine output. The data from the U.S. Geological Survey, USGS, and various mining reports consistently highlight this trend, a widening gap between industrial demand and primary mine supply. This deficit is currently being met by drawing down existing above-ground stockpiles, particularly those held in COMEX-registered warehouses. However, these stockpiles are finite and dwindling rapidly. The amount of registered silver available for delivery on the COMEX has fallen to multi-decade lows, signaling an extreme tightening of the physical market. This isn't just a statistical anomaly. It's a physical reality that indicates a severe supply crunch is imminent. When these readily available stockpiles are exhausted, the market will be forced to confront the true scarcity of silver, leading to a dramatic repricing. The year 2026 is projected to be the point where these stockpiles reach critically low levels, making the supply deficit undeniable and forcing a market reckoning. The gold-to-silver ratio, a historical barometer of their relative value, further underscores silver's extreme undervaluation. As discussed, this ratio has historically been much lower, reflecting silver's greater abundance in the Earth's crust. However, the ratio has been artificially inflated for decades, largely due to gold's perceived monetary superiority and silver's historical suppression. But as silver's industrial utility becomes paramount and its supply deficit becomes undeniable, this ratio is poised for a dramatic reversion to its historical mean, or even lower. A return to a 40:1 ratio, let alone 20:1, would imply a massive increase in silver's price relative to gold. This isn't just a theoretical possibility. It's a mathematical inevitability driven by the fundamental forces of supply and demand in a technologically advanced world. The data, when analyzed objectively, suggests that silver is not merely undervalued, it is profoundly mispriced, and the market is slowly but surely waking up to this reality. The geopolitical landscape also plays a crucial role. As nations compete for technological supremacy and secure critical resources, the strategic importance of silver will only grow. Countries that control significant silver reserves or have robust recycling capabilities will gain a distinct advantage. This could lead to resource nationalism, export restrictions, and even geopolitical tensions over access to silver supplies, further exacerbating supply constraints and driving up prices. The quiet accumulation of silver by certain nations and industrial players, often below the radar of mainstream financial news, is a testament to its growing strategic value. This isn't just about investment, it's about national security and economic resilience in a rapidly changing world. The confluence of these factors, exploding industrial demand, inelastic and declining mine supply, dwindling above-ground stockpiles, extreme undervaluation relative to gold, and increasing geopolitical significance, creates a perfect storm for silver. The year 2026 is not some arbitrary date. It's the projected point where these forces will reach critical mass, making silver's quiet overtaking of gold an undeniable reality. The market, often slow to react to fundamental shifts, will be forced to reprice silver to reflect its true value as an indispensable industrial commodity and a critical monetary metal for the future. Those who fail to see this coming, who continue to view silver through the outdated lens of its past, will be left behind as the world shifts its focus to the metal that truly powers the 21st century. The data is clear, the trends are undeniable, and the consequences for your wealth are profound. The quiet revolution of silver is not merely an academic exercise in market analysis. It is a profound, impending shift with direct, tangible consequences for your personal wealth, your financial security, and your ability to navigate the turbulent economic waters of the coming years. As we unveil the ultimate implications of silver's inevitable rise, comment "Prepared for 2026" below if you are actively repositioning your assets to capitalize on silver's projected dominance. This isn't a speculative gamble on a volatile asset. This is a strategic imperative, a guide to protecting and growing your wealth, based on an undeniable convergence of industrial demand, supply scarcity, and the fundamental reevaluation of what truly constitutes value in the 21st century, a truth that will become brutally clear by 2026. The traditional financial narrative, heavily influenced by institutions with vested interests in maintaining the status quo, has long painted gold as the ultimate safe haven, the only true store of value. This narrative, while historically potent, is becoming increasingly detached from the economic realities of a world driven by technology and green energy. The data, which we've meticulously examined, proves that silver's utility, its sheer indispensability to modern industrial processes, far outstrips gold's largely ornamental and psychological role. This isn't to say gold will become worthless. It will always retain a certain value as a monetary metal and a cultural artifact. However, its growth potential, its ability to truly shock the world with a sustained fundamental repricing, is severely limited compared to silver, which is poised to benefit from a perfect storm of demand-side pull and supply-side squeeze. The window for recognizing this asymmetry, for positioning yourself ahead of the curve, is rapidly closing, and by 2026, the opportunity will have largely passed, leaving those who failed to act grappling with the consequences. Let's consider the direct impact on your portfolio. For decades, the standard advice has been to hold a portion of your assets in gold as a hedge against inflation and market volatility. While this strategy has served many well in the past, it fails to account for the structural changes underway. As industrial demand for silver continues its exponential growth, driven by the multi-trillion-dollar transitions to renewable energy and electric vehicles, silver's price will be underpinned by an ever-increasing floor of fundamental utility. Gold, lacking this robust industrial demand, remains more susceptible to speculative flows and shifts in investor sentiment. The data suggests that the gold-to-silver ratio, currently at historically elevated levels, is due for a dramatic reversion. This isn't a minor correction. It's a fundamental recalibration that implies a multifold increase in silver's price relative to gold. If you hold gold, you might see modest gains. If you hold silver, especially physical silver, you are positioned for potentially life-changing returns, driven not by hype, but by the undeniable forces of supply and demand for an essential commodity. The psychological pressure on the market will be immense as 2026 approaches. As the structural deficit in silver becomes undeniable, as above-ground stockpiles dwindle to critical levels, and as industrial users scramble to secure supply, the price will not just rise, it will surge. This surge will trigger a feedback loop. Rising prices will attract more investor attention, further exacerbating the supply squeeze and pushing prices even higher. The mainstream media, which has largely ignored silver's fundamental story, will be forced to cover its meteoric rise, creating a wave of FOMO, fear of missing out, among retail investors. This isn't a prediction of a temporary bubble, it's a projection of a sustained repricing driven by real-world scarcity and utility. The data proves that the market is currently underestimating silver's role in the future economy, and this mispricing represents an extraordinary opportunity for those who understand the hidden math. But the implications extend beyond mere investment. Silver's rise is also a warning about the fragility of our current economic system. The very forces driving silver's demand, the push for green energy, the electrification of transportation, are responses to global crises. The supply constraints, on the other hand, highlight the vulnerability of our resource chains. As the world becomes more technologically advanced, its reliance on critical raw materials like silver intensifies. Any disruption to the supply chain, any geopolitical tension in major mining regions, could send prices spiraling upwards, impacting not just investors, but also the cost of essential technologies. This creates a sense of urgency. Securing your exposure to silver isn't just about profit. It's about positioning yourself against the backdrop of an increasingly unstable global economy, where access to critical resources will dictate power and prosperity. The window for preparation is narrowing. The data points to 2026 as the critical inflection point, the year when the market will be forced to acknowledge silver's true value. This means you don't have years to ponder. You have months to act. What practical steps can you take? First, educate yourself further. Understand the difference between paper silver, ETFs, futures contracts, and physical silver. While paper silver can offer exposure, it carries counterparty risk and does not contribute to the physical supply squeeze. Physical silver, held in your possession or in secure allocated storage, is the ultimate hedge against systemic risk and the purest play on the coming supply crunch. Second, consider diversifying a portion of your portfolio into physical silver. This isn't about putting all your eggs in one basket, but about rebalancing your exposure to reflect the changing realities of the precious metals market. Third, understand the implications of the gold-to-silver ratio. As this ratio inevitably compresses, it implies that silver will outperform gold significantly. This knowledge allows for strategic allocation, potentially even swapping some gold for silver to maximize your exposure to the coming surge. The emotional impact of this shift cannot be overstated. For generations, gold has been the symbol of wealth and stability. To see it quietly, yet definitively, overtaken by silver will be a psychological shock to the financial world. It will force a reevaluation of deeply held beliefs and challenge the very foundations of traditional investment wisdom. Those who embrace this new reality, who act on the data rather than on outdated dogma, will be positioned to thrive. Those who cling to the past, who dismiss silver as a secondary metal, will witness a monumental transfer of wealth, a quiet redistribution from the uninformed to the informed. This isn't a matter of opinion, it's a matter of mathematics, industrial necessity, and the relentless march of progress. The data proves it. The trends are undeniable, and 2026 is the year the world wakes up to the quiet power of silver. Don't be left behind. The time for action is now.